The world's #1 SEO software company is going public. In today's video, we're talking about SEMrush's enormous investment in their own sales and marketing, their net revenue retention, and their prospects as a public company.
It is Wednesday, March 24th. This is the Piper Rundown. We analyze business and culture to help you win. Today's rundown is presented by Piper Creative. We here at Piper Creative really adore creating this dope content for you, and it would mean so much to us. You hit subscribe, hit the like button, smash that notification bell. I don't know why people say smash. You can't aggressively click something on the internet.
You can.
Okay, well maybe you should. With vigor, with enthusiasm, it would mean the world to us. We love making stuff for you.
Primary topic today is the SEMrush IPO. SEMrush is a search engine optimization software. If you're not familiar with the space, there's a couple major players. SEMrush, over the last couple years, has ascended from basically being third or fourth to #1. They show the most revenue, the most precipitous growth. Their competitors, Moz, Ahrefs, coming in at #3 and #2 respectively. Also SimilarWeb and SpyFu. But what is search engine optimization? Google sends out crawlers, sends out trackers in order to scrape more or less the entire internet, make sense of it, and then give you the results when you type a search into a Google search bar, into a Chrome browser, what have you. There is an entire digital marketing industry built around making your website more crawlable, more legible, more appetizing, so that Google will send you traffic for free. There's a whole other side of Google's business, pay per click, being able to pay to be that preeminent result. But organically, if you play Google's game, if you make yourself more legible to their bots and crawlers, then they are going to send you traffic.
Yes.
This is a big business. SEMrush is approaching public markets with something approaching a $2.2 billion valuation. They do that by having a boatload of customers, 67,000 customers, and those customers are paying somewhere between $120 and $450 a month, which puts their ARPU, you remember ARPU? Yeah.
ARPU.
That term?
No.
Average revenue per user.
Ah, yes.
At $1,864. So most of them are at that lower price tier, but on an annualized basis, that's what they're getting from one customer, and they have over 67,000. Now, the other big number that you always need to be prepared to focus on when you're talking about a B2B SaaS company, B2B software, is net revenue retention. Net revenue retention is a relatively simple calculation of, okay, we know what someone pays us in the first year of business with us on average, and over the course of time, are we leaking customers? So is there churn? How high is that churn? In conjunction with revenue expansion. So if I come in at the $120 tier and I buy more seats so that more people can use it, or I upgrade from the $120 all the way up to the $450 per month package, then my revenue is expanding for SEMrush. Their net revenue retention is a very healthy 114%. When you have a positive net revenue retention, it allows you to get more aggressive in growth, and that's what SEMrush has done in recent years. It also is the basis for their very aggressive sales and marketing investment. We define the aggression of that sales and marketing investment by saying that they have just a 0.6 times sales and marketing multiple. What that means is every time they spend $1 in their own sales and marketing efforts, they get back 60 cents of revenue. You say to yourself, well, Aaron, I don't know if that necessarily makes sense. That doesn't seem sustainable. It's only sustainable. It's only a potentially viable strategy when you have that positive net retention, because that 60 cents this year becomes 114, 68 cents the next year. And in 2 years, you've effectively paid back what it cost to acquire that customer. So SEMrush is running a very intense growth playbook that's translated into $124 million in revenue in 2020, up from $92 million in 2019.
Super impressive. And in case we didn't mention it, they are spending $54 million on marketing. That's what they spent on marketing last year. And SEMrush, they are obviously best known in world class at their SEO products, but they also offer some other add-ons, some other tools for web developers, for social media managers. They do content research, traffic analytics. They kind of cover the board when it comes to running and managing a website or a business, which is super cool. Their biggest competitor right now, the largest company that they're competing with is Sprout Social, which is also the only other publicly traded competitor of theirs, which I found interesting. But Sprout Social is much more into the social media management, while they have carved out their corner for the SEO and keyword management research.
Well, to me, that's also like the marketing software thing, is it's always going to expand out.
For sure.
It's basically similar to like the fintech stuff, where they start with like kind of one use case and then they start building all the other financial services around it. All these marketing software platforms are, highly incentivized to take more wallet share and to build out more features and to try to be that, all things to all people type of platform. Because, not that HubSpot or one of those CRM more based platforms is focused on SEO, but they could be. Right. You could imagine them, incorporating that in some way, shape, or form.
Well, it's also something that so many people need, and I think I really like SEMrush's structure of payment plans and stuff, because they have over 400,000 non-paying customers where they don't have access to all these premium features and stuff. But for the smaller business owner who can't spend that $400 a month, the $119 option is super viable, especially like keyword research is gold. We're finding that out with the Piper rundown and just how we're ranking higher and seeing our views go up whenever we are smart about some of the keywords we put in our titles. I think most of the time when someone starts a business, when small business owners first build their websites and putting out content, they don't know where to start when it comes to keyword research, or have maybe never heard of SEO. And I know for me, when I made my first website, my first blog, I stumbled into SEO as a fluke, because I saw, all these different blog posts that I was publishing had random titles. I wasn't thinking super hard about it, but then I made one that was just titled Drawings of Faces, and my website traffic shot up because that just is good SEO. Like, it's a smart title explaining exactly what the content of the post was. And I would imagine that a ton of other people are in that same boat. They see that this stuff is important, and SEMrush can definitely be the tool to help you hone in on that skill.
And SEO, so we're going to get in the bull and bear case here in a sec, but SEO as a marketing strategy is not particularly brand oriented. There is stuff you can do about making sure that when your brand title is typed into Google search, that you are that preeminent result. I think AT's going to throw a graph up here, but I know for Piper's site, I think it's like 50% or something of our traffic is people searching Piper Creative, which is an indicator of your brand equity if that's what people are coming to you for. But maybe there's a missed opportunity if you aren't just kind of getting that other traffic your way. But it's this catch-22 of all of these companies are, hopefully, you would imagine, the preeminent leaders in SEO strategy and understanding how it works and can implement that for themselves. But that isn't the same as having a brand that is just, overwhelming. So I actually didn't even know some of the, Spy Food. I did not know that before we started doing research for this. I'd heard of Moz, I'd heard of Ahrefs, but it's funny, they're these SEO centric software companies, but they need to build a brand as an SEO company in order to get that business and continue to serve that market. So it's a very fascinating catch-22. And a couple more quick numbers here. Share prices are going to be between $14 and $16 per share. It's 3 16s. $14 to $16 a share, so call it 15. In that range would put them at about a 16x multiple, which is the approximate standard for SaaS multiples these days. And you can see how over the last decade or so that's been on a pretty precipitous incline. And they're selling about 16 million shares as a part of this, some Class A and some existing shareholders selling their shares. But if you want exposure to SEO, if you believe in SEO, if you are a bull that it is a industry that will continue to prosper, we have a couple reasons for that, but that is why people may be piling into SEMrush, or they're just broadly super into B2B SaaS and want to get part of that action. The number one bull case is simply the long macro belief that digital real estate matters a great deal. I think that's kind of been a lesson of the pandemic. Is obviously there's crazy stuff going on in real estate, but if people aren't coming into your storefront, they're coming into your digital storefront, and that digital real estate needs to be tight. It needs to be executed properly, and an SEMrush type of service helps you do that. And so if that's going to be in secular, not decline, what's the opposite of decline? Incline over the coming years, SEMrush is poised to take advantage of that. Another thing in the digital space that is in decline is the use of cookies. So people are using more and more ad blockers, and there is a general push against the use of cookies, which is where you are followed around the internet. You're on one website and some other website tracks you there so that they can show you an ad for that website that you went to on their website when you come back to a Facebook or something like that. And organic. Now, SEMrush is involved in that space, and they do use APIs with those other kind of suite of services, but they still are preeminently an SEO service. SEO is not predicated on cookies. So people talk about like the death of cookies, that being good for a very email-centric type of service, that is also good for a very search engine-centric type of service like SEMrush, would make that type of marketing more relevant in digital spaces. So that is another bull signal for them and their service. Even if they would be hurt, they wouldn't be, squarely in the crosshairs of that cookie apocalypse. On the flip side, I think there are two really big points to make, potentially three, for the bear case associated with this. The first one is simply Google risk. Google changes their algorithm with frequency, and not only could it potentially prove moot some of SEMrush's insights that they've worked hard to build, given a substantial Google update, but Google has the capacity to also be bringing these types of services to markets. They try to do that to some degree with Google Analytics, but it is, we talk sometimes about competing with these tech behemoths in their kind of adjacent fields. Yep. So Amazon isn't primarily a wearable company. Right. And so if you're Whoop and you're making a wearable, you're not really getting like the Eye of Sauron's number one focus from one of these giants. Google's primary business is search.
Yes.
So you are squarely in the crosshairs of one of the most well-capitalized enterprises in the history of Earth's primary profit operandi. So if you are going to be there, there's the capacity for one single entity to change a policy, to adjust how they do things, and potentially put you at risk. Do I think that is likely? Not necessarily. I think Google fundamentally likes that there are an entire cottage industry built around making other people's assets more legible to Google's primary objective. Right. But it is still a consideration that you need to make before you put money into a company like this.
Definitely.
The second part here comes back to what I was saying before about the branding standpoint of differentiation. It is hard for me, a digital marketing practitioner, to really articulate the difference between an Ahrefs and an SEMrush and a Moz and some of these other platforms. We use SEMrush sometimes to improve the search engine results for our website, but the right deal, the right pitch from a friend that I trust, we don't have a particularly large amount of brand loyalty. And I think that that's relatively hard to engender evidenced by these being relatively low. For B2B SaaS, these are relatively low ARPUs that really require a lot of customers coming in and a lot of work to be done to reduce that churn. And then this is me more kind of shooting from the hip. I don't necessarily know if I fully believe this one, but we are moving into an era away from text-based search into voice search.
Yes.
And I would imagine that SEMrush would be relatively well equipped to help companies in that domain, given their experience propensity with search engine optimization generally. But voice search is different than text-based search. And so if that change happens more quickly than they might anticipate, or if there is a dedicated provider focused on voice search that emerges and takes market share from them, while text-based search is in relative decline, then that is also a cause for concern. So invest wisely. None of this is investment advice. Please make your own decisions. Do not put more money into the markets than you can afford to lose during these crazy times. And hit subscribe because you love content like this, and we're great.
Great reasons.
Facts. Speaking of great.
Yes.
Krispy Kreme has announced that if you've been vaccinated, you're going to get free donuts every day for the remainder of the year. Your thoughts, Hannah Phillips?
My thoughts were, so initially you see a campaign like this and you're like, damn, that's really smart.
Savvy PR.
Savvy PR. But really, okay, don't get me wrong. Freaking will sling back a Krispy Kreme donut like nobody's business. Those original glaze, there's quite literally nothing like them. However, I don't really want to eat one of those things every single day. If anything, I think that would be detrimental to my health more so than any virus. Sugar is the enemy. No, it's really not. Like I'm not a stickler for stuff like that, but that certainly is like not better for you than other outcomes. I don't know. It's a weird thought to.
I mean, I honestly think. I don't know. I'm not a health practitioner. I think that if you ate a donut every single day for the remainder of the year, that is going to be a worse health outcome than not getting vaccinated.
I agree. Yes. So, make your own choices. We're not doctors. We are not financial advisors. But
if someone said you have to eat a donut every single day, a Krispy Kreme donut every single day for the remainder of the year, I wouldn't get vaccinated on that basis.
Yeah. I no.
I don't even like Krispy Kreme.
That's whack. Wild take.
Maybe the most overrated donut brand on the planet.
Wow.
Dunkin' took donut out of their name, and they still make better donuts.
I do like Dunkin' donuts better. That's the rundown.